Today's highlights: Bitcoin is still bottoming out, while US regulators are joining forces and a turning point is emerging. Amid multiple changes in the crypto market, where do the opportunities and challenges lie? Can MiPay's move to connect fiat and crypto payments help it seize the initiative in the payments sector? Reconstructing the value system with digital assets, tracking 24-hour crypto developments, and elevating your wealth level through knowledge. It's Wednesday, March 11th. This is Dong Dong from the BitcoinTV Chinese channel B-Link. Let's first look at the most important data headlines from the past 24 hours in the crypto world. The latest data shows that Bitcoin has once again climbed above $71,000. It seems like the market is rebounding, but the atmosphere in the derivatives market is a bit subtle. Over the past 7 days, Binance's open interest has increased by about 15%, indicating that quite a bit of new leveraged capital is entering the market. Interestingly though, the funding rate is still negative. On BitMEX, the lowest funding rate is about negative 0.018%. Although Binance and HKEX are close to neutral, overall, it's still the shorts paying the longs. Simply put, even though the price is rising, many people are not optimistic about it. They keep shorting as the price goes up. This situation, where the price rises, open interest increases, but the funding rate remains negative, usually means that short positions are piling up more and more. If the price continues to rise, it's very likely that these people who are shorting will be forced to close their positions and take a loss. At that point, the volatility could become even more intense. To put it simply, the current Bitcoin market can be summed up in one sentence: everyone is waiting, but no one dares to make the first move. There's a very important indicator called apparent demand. Simply put, it measures whether there are any new sell orders in the market. After the previous sharp price drop, there was indeed a wave of capital trying to buy the dip, which briefly pulled demand back close to positive territory. However, the good times didn't last long. Now, the 30-day apparent demand has dropped to a negative 30,827 BTC, which shows that the buying side simply can't absorb the selling. Let's look at another bull market cycle indicator called CryptoCoin. It also shows that the market is somewhat like a bear market consolidation phase, neither rising nor falling, just grinding sideways and wearing people down. What's even more interesting is that even some long-term holders have started selling their coins at a loss. The LTH SOPA has already fallen below a historical threshold, and looking at past experience, this kind of situation usually appears in the later stages of a bear market. Veterans are buckling under pressure as newcomers take their place. The market remains tough, but this turnover in holdings often sets the stage for the next rally. Recently, there's been an interesting signal on-chain. Ethereum has suddenly become very lively. According to data from CryptoCoin, the number of active addresses has risen significantly and is now approaching historical highs. Simply put, more and more wallets are becoming active on-chain, either making transfers or interacting with various smart contracts. Structurally, the main source of this activity is coming from a few areas. DeFi is still busy with lending and DEX trading. Stablecoins like USDT and USDC continue to circulate on-chain at large scale. And on top of that, a bunch of MEV bots and automated trading programs are constantly running strategies, all of which are driving the number of on-chain transactions higher and higher. What's even more interesting is that, although on-chain activity is increasing, prices are still fluctuating and haven't fully caught up. This kind of situation usually indicates one thing: the ecosystem is getting busier, the fundamentals are gradually strengthening, but the market price hasn't fully reflected this yet. Please like, follow, and turn on the notification bell. We'll monitor news updates for you 24/7. Our channel is rooted in a macro perspective, providing in-depth integration in just 15 minutes, helping you quickly grasp major changes in the digital asset field and enhance your understanding. Let's take a look at today's news. This one is really worth highlighting. The US is finally about to put an end to the situation where insiders are trading among themselves. In the past, the biggest problem with the US crypto market wasn't the technology, but rather the overly tangled regulations. The CFTC and SEC have been in constant conflict. When it comes to cryptocurrency, is it a commodity or a security? The two major agencies each have their own stance, which has kept compliance costs for businesses high. As for institutional funds, they've been hesitant to enter the market. Now, with Project Crypto officially launched, it marks the end of internal strife. This isn't just about two regulatory agencies shaking hands, it's also a clear signal from the Trump administration to the entire crypto industry. The United States wants to reclaim its global dominance in digital assets. In my opinion, this is more significant than any other positive news, because once the legal framework is clear, the money will follow. Institutional funds can then enter an orderly market, and DeFi can also achieve compliant implementation. Prediction markets will no longer have to operate in a gray area. Simply put, this is the real turning point the industry has been waiting for.
Recently, CFTC Chairman Mike Selig announced at the FIA conference in Florida that, together with SEC Chairman Paul Atkins, they are jointly launching Project Crypto. This marks the first time the two agencies are collaborating across departments to end years of jurisdictional disputes and provide a unified legal framework for the crypto industry.
Our two agencies must work in lockstep to transform dual regulation from a source of confusion into a source of strength. Together, we can offer the best of both worlds: the investor protections that have defined U.S. markets, combined with the innovation-friendly approach that will keep us at the frontier of financial technology throughout the 21st century. So, ladies and gentlemen, it is indeed a new day at the SEC and the CFTC.
The Cabinet has clarified three major policy directions, released guidelines for forecasting market operations, and launched a public consultation to clarify whether DeFi software developers trigger CFTC registration obligations, as well as to draft classification and regulatory standards for crypto perpetual contracts. Analysts believe that U.S. crypto regulation is shifting from strict enforcement to the establishment of clear rules.
The shift in U.S. crypto regulation has never been an isolated event, from Trump signing the executive order on digital assets to the implementation of Bitcoin as a strategic reserve, and now to the formal collaboration between the CFTC and SEC. A clear policy trajectory has already emerged. The United States is systematically removing institutional barriers to the crypto industry. For DeFi practitioners, the signal is very clear. Compliance is the prevailing trend. Rather than waiting on the sidelines, it's better to proactively embrace it. With the prediction market now having clear guidance, it means there will be more room to operate in the future. As derivatives become regulated, the door is officially open for institutions to enter. We are witnessing a turning point as the industry shifts from wild, unchecked growth to orderly expansion. And once this historic turning point is set in motion, it is irreversible. This upgrade is far more than just adding a few new features. Apple Pay and Google Pay now cover 62 countries worldwide, from airports and supermarkets to buses and subways. Cashless payments have already permeated every corner of our daily lives. For consumers, the question is no longer whether it can be used, but rather how fast and smooth it is, and whether it supports cross-border transactions. More importantly, Apple Pay has already started to support this. This shows that crypto assets are gradually infiltrating our everyday spending. So, can we seize this upgrade opportunity? Growing from a niche tool into something users open every day is definitely worth our serious attention. But if you ask me, restoring remittance is just the first step. The real challenge is how to truly integrate crypto payments, making them convenient for people to use, and making it a habit.
Recently, MiPay has completed multiple feature upgrades. RMB remittance services have been fully restored. Users will soon be able to quickly withdraw funds via Alipay, and the new card design has been completed and entered the review stage, with official launch expected in mid-second quarter. This will provide a more intuitive payment interface and a brand new visual experience. In terms of payments, MiPay has added comprehensive support for Apple Watch and mainstream smartwatches, allowing users to make payments without taking out their phones. It covers shopping, commuting, and overseas spending. Meanwhile, USDT and USDC integration supports daily payments and remittances, connecting fiat and crypto assets seamlessly.
This upgrade of MiPay has sent a signal to the entire payment industry. Users' choice of payment tools has evolved from simply being functional to being convenient and user-friendly. Now, with just a phone or a smartwatch, we can make payments. What used to be science fiction is now part of everyday life. More importantly, the line between crypto assets and fiat payments is becoming increasingly blurred. With this dual-track system, you can keep both RMB and USDC in the same wallet and spend either one. This greatly increases the flexibility of moving funds around, which is especially essential for people with cross-border needs. Looking at the long term, whoever can seamlessly integrate fiat and crypto payments anytime, anywhere, will gain the upper hand in the next generation of payment systems. MiPay is heading in the right direction with this move, but whether it can truly be implemented will depend on how well it's executed going forward. Can the model of paying salaries and supporting healthcare solely with Bitcoin be replicated in small economies? What makes Korea's 726% leveraged ETF so attractive to crypto retail investors seeking to get rich quick? Today's news might come from a place you rarely pay attention to, not only a small Buddhist kingdom hidden deep in the Himalayas. My understanding of Bhutan still comes from Dongdong. Back when I was studying abroad, there was a girl from Bhutan in my class. I was studying film in Canada at the time, and she told me that very few people from Bhutan go abroad to study, and those who study film are even rarer. Back home, they film snow-capped mountains and temples, but they don't shoot stories. So she was the only one in those years who went abroad to study film. I thought she was really impressive. Even more impressive than that is Bhutan itself. It is now the world's 7th largest national holder of Bitcoin, holding about 5,400 Bitcoins. Just this week, on-chain data detected that Bhutan transferred 175 Bitcoins, about $11,850,000, from its national holding address. According to historical records, such transfers usually mean that they are about to sell through institutional channels. In February of this year, they did exactly the same thing. They sold $7 million worth to the institutional trader QCP Capital. But what I really think is worth talking about here isn't just the cashing out itself, but the reason they're selling Bitcoin. They're literally using this money to pay the salaries of park workers. They're keeping the national healthcare system running. This is the only country in the world that's actually using Bitcoin as operational funds for the state. A small country mining in the mountains in secret, quietly hoarding coins, and then using them to make ends meet. It sounds surreal. But this is reality.
Arkham's on-chain data shows that not only did they transfer 175 Bitcoins from the country's main holding address to a newly created address from a month ago, it was pointed out that the last time Bhutan made a transfer of similar scale was in February this year. Afterwards, they sold it to institutional trader QCP Capital for $7 million US. Bhutan regularly sells in batches ranging from $5 to $10 million US. In mid to late September 2025, there was a concentrated large-scale sale. Currently, Bhutan holds about 5,400 Bitcoins, ranking 7th among national holders worldwide. The United States tops the list with 328,000 Bitcoins.
We have used Bitcoin to provide free healthcare for our environment, but these are minor. The main use of Bitcoin has been to finance the salaries of public servants.
Since launching national-level Bitcoin mining in 2019 and relying on hydropower resources from the Himalayas, Bhutan has mined a total of about 13,000 Bitcoins, all managed by the Sovereign Wealth Fund, Drug Holding and Investments. After the Bitcoin halving in 2024, mining costs have increased. As profits drop, some compute resources shifted to AI high-performance services. From 13,000 Bitcoins, only 5,400 remain. Over 60% of reserves were sold, with the income supporting the country's public finances.
Let's consider a deeper question. If a country truly uses Bitcoin as a fiscal tool, not for speculation, not for hoarding, but to pay doctors' salaries and civil servants' wages, what does that mean? Not only is it a small kingdom without large-scale agriculture or manufacturing, even its food relies on imports, but it has cheap hydroelectric power, so it uses that to mine Bitcoin. Then it uses the appreciation of Bitcoin to support civil servants, build hospitals, and promote environmental protection. If this model works, it would provide a brand new path for so many types of small economies around the world. Dongdong thinks this is far more significant than just news about Bitcoin rising again or some institution selling off. It means that Bitcoin is gradually transforming from a speculative asset into a tool that can truly be used within the fiscal systems of sovereign nations. Behind this $11.85 million transfer lies a microcosm of this very trend. This piece of news is worth everyone in the crypto community pausing for a moment. Think about it. Korean retail investors, who were once the most powerful force in the global crypto market, are quietly shifting their battlefield. Faced with the most dramatic turbulence in the Korean stock market in nearly 20 years, they didn't run away. Instead, they poured their money into triple-leveraged ETFs that go long on the Korean stock market. Why? Because the math is just too straightforward. Over the past year, Bitcoin has dropped nearly 20%, while Korea's KOSPI has risen by 111%. The triple-leveraged version has skyrocketed by 726%. Where does retail investors' money go? It always flows to wherever the wealth effect is strongest. What we're seeing today isn't just a piece of market news, but a signal of the times. the crypto market is losing its most valuable appeal to retail investors. That chance for sudden wealth brought by extreme volatility is now being replaced by leveraged stock instruments.
According to Bloomberg data, as of March 6th, inflows into ETFs tracking Korean stocks surged to $21.5 billion, with leveraged products accounting for as much as 20%. Among them, the triple-leveraged ETF Koru issued by Direction saw a net inflow of $520 million in a single week, with a single-day peak of $190 million. Behind this round of activity, the Korean stock market had just experienced a nearly 18% plunge over 2 days. A strong rebound followed, marking the largest single-day gain in nearly 20 years. Retail investors concentrated their bets on a semiconductor rally led by Samsung Electronics and SK hynix.
There's big structural supports there for the market. Obviously, valuations had moved up a long way, and I think when we look at the North Asian markets, whether it's Taiwan, Japan, or Korea, they're going to be reconsidering their role in the AI supply chain and how, in fact, that hasn't really changed given what we've seen in the last couple of days.
Korean retail investors once formed the world's largest crypto retail pool. Recently, the market has consolidated, lacking new drivers. Bitcoin fell nearly 20% this year, and its high volatility has faded. In stark contrast, the Korean Kospi has risen 111% over the past year with triple leverage, while Koru has soared even higher, reaching 726%. Retail capital is rapidly withdrawing from the crypto market and flowing into the semiconductor-driven Korean stock market. A historic cross-asset migration is taking place between these two types of assets.
The latter part of this news is actually even more worth a closer look for those of us in the crypto community, because regulators have stepped in, and the signal is very clear. Domestically, single-stock leveraged products are not allowed. The leverage cap for index fund products is set at 2 times. Brokerages must strengthen risk warnings regarding exchange rates, and investors intending to purchase overseas leveraged ETFs are required to undergo mandatory online training. With this series of measures, the government has actually recognized the risks. Large-scale purchases of overseas leveraged ETFs by retail investors are putting pressure on the Korean won exchange rate, and if there is a wave of forced liquidations, it will in turn amplify volatility in the domestic stock market. For crypto investors, regulation has never been about stopping people from playing, but rather about preventing things from spiraling out of control. History keeps reminding us that retail investor frenzy usually comes before tighter regulation, and tighter regulation often precedes a market shakeout. So don't just watch the excitement. Staying alert is never a bad thing.
Recently, there's been a quiet recovery. Data from the US stock market shows that Ethereum has seen net inflows for 2 consecutive weeks, and it seems institutions are slowly testing the waters. Traders joke that this pace is a bit like when the BTC ETF first started, testing the waters before increasing their positions. Coinbase's base chain has been especially lively and active lately, with both the number of addresses and transactions hitting new highs. Everyone's piling in for the MIM minigame airdrop. Simply put, wherever there's hype, there will be users. Solana has reclaimed the top spot for on-chain transactions, with its daily trading volume once again surpassing Ethereum and all Layer 2s. Although many of these are bots and MIM, one thing is clear: Solana really knows how to stir things up. Stablecoin giant Tether recently announced an expansion of its gold-backed stablecoin, XLOT. Simply put, in the future, your wallet might hold 3 types of assets at the same time: dollar stablecoins and gold stablecoins. Also, the Bitcoin AI agent sector has started heating up again recently, with several Web3 funds getting involved. They are investing in AI plus blockchain automated agents. However, developers are also reminding everyone that many AI agents are still in the testing phase right now.
In the past, we all believed that knowledge is power because information was hard to come by. But in the age of AI, there is so much information that it's almost overwhelming. What's scarce now is no longer information, but understanding and decision-making. The significance of AI agents is that they outsource a large amount of repetitive thinking, allowing humans to focus only on the most critical judgments. When you let AI help you organize information, draft initial versions, or perform data analysis, your mind should be focused on higher-level issues. Many people think that AI will make humans lazy, but in fact, it's quite the opposite. It gives people the opportunity and time to spend on truly important things. Remember, AI doesn't think for you. It makes your thinking more efficient. Alright, that's our in-depth breakdown for this episode. Our channel is always focused on the core narratives and value discovery in the digital asset space. If you agree with our logic, feel free to stay updated with the latest news and enable real-time notifications. If you want to access higher-level research reports, from Monday to Friday, I share my personal in-depth reviews of market cycles, capturing certain opportunities within trends. See you tomorrow.